Alright traders, I am back again with another video, and this video is just a portion retake or add-on basically for the previous video I made with the Heikin Ashi Ichimoku trading. I wanted to show you a trade that I've taken using Ichimoku and Heikin Ashi together, but basically we sent this out to members last night. Members get these trade alerts. Well, basically we don't call them trade alerts because we call them trade setups, because all I do is really show the setup and then we wait for the setup to take place, because we'll talk about what's happening. So I'm going to take you through this, but what you see here, I have this dash line which is the normal Tenkan-sen, and then I have my Tenkan-sen sub which is the 9-period EMA. And the reason I have them both on here is because I use it to show my members the differences between why I use the sub over this over the regular Tenkan-sen. Now either way is good. I show how to use it basically with the Tenkan-sen sub and without the Tenkan-sen sub. Alright, because the Tenkan-sen sub is going to ride right on the price really tight. Now normal Tenkan-sen, you're going to have some flat periods here where you may not understand and be able to get into the trade, but I always tell you that you trade your time frame, because I'm not using multiple time frame analysis here. I'm just trading the direction of the TK crossover. The TK crossover here was bullish, so you should have been trading to the upside here with your trade. So following the TK crossover, that's the direction you want to trade in. So here we were sitting tight and we had this crossover. So basically this happened this morning when I woke up, but my mentality was basically I thought we were going to see a bounce here and then price go to the upside. But when I started seeing that we couldn't get above this blue line here, which is my Kijun-sen, so we weren't able to close above Kijun-sen, and we kept spiking at that level, and then I thought we may close to the downside. So once I told you how to look for a trade off of using the Heikin Ashi candles, basically you're looking for these doji type candles, and basically we'll call these indecision candles. So you had a couple of them develop here. So what I wanted to do was put a line below that level and enter at that point. Well, I saw this candle close here. We already had this indecision candle here, so I entered on this candle here because it was a bearish candle and it closed lower than this previous close. All right, and then also you had a violation of this level right here, which was this indecision candle that we're looking at. Let me draw it real quick just so you make sure you see what I'm looking at. This candle right here, I wanted to get a close below that point or a break below that point, and we got that, and then we got a bearish candle here, and that's where I took the trade. You can see my entry is right here. All right, my stop loss currently is here, but I need to move it. I'm going to move it probably right here to Tenkan-sen. I'm going to follow Tenkan-sen, so Tenkan-sen will probably trigger me out. But another way that I'm going to look to get out is when the price is going to form a reversal. What's going to happen is you can see how we're making these lower lows here, these lower closes. I'm not concerned about this low. I'm concerned about the close. So when we're looking at the close here, every candle opens in the middle of the previous candle. You could see that, you see that, and you see that. So if there's momentum, let me erase that. If there's momentum and we open midpoint and we have momentum, we should close below that point, below this point here, right? But if we don't close below that point, what happens is you get open here, and then maybe your candle comes down here somewhere and it closes here, and you start getting a smaller candle. All right, and then the next candle maybe becomes maybe an indecision candle, and then that's where you want to look to put your stop loss above that point, and then let the market trigger you out, or either keep going in your direction. Now I know I show this winning trade. I like to show some losing trades, but you could look at my last trade that I posted, and that was a losing trade, and it was based off of I remember the pound yen, I believe it was a trade that I was looking for a bounce, pretty much like I was looking here. But I always tell you that when I open up a trade or a trade idea, my thing is I'm always having I don't have a bias pretty much to say. My bias isn't saying I'm going to trade this to the upside or I'm going to trade it to the downside. I let the price pretty much tell me what to do, and there's certain ways that I look at the market. All right, and I use a lot of fractals, and I use a lot of support and resistance and Ichimoku mainly, you could see, because once we had this crossover, we had a bearish crossover right here. You could see that bearish TK crossover. So you're probably getting confused with both lines on here. So let me remove one. All right, first we'll remove this one. This is going to be the sub, all right? So let's move it. This is the normal Shinkansen, sorry. So with what you're looking at now is the Shinkansen sub, so that's going to be a 10-period EMA. I mean a 9-period EMA, sorry. It's a 9-period EMA based off of the Shinkansen, which is a 9-period. Basically almost like a moving average. So we're using a 9-period here, and you can see we had a crossover here, and then price was never able to get above this Kijinsen. That was vital. Price cannot get above the Kijinsen, and you can see pretty much Kijinsen is like your trend line, and when price closes below that Kijinsen, you're pretty much getting a change of direction. Now that's not 100% guaranteed, but that's one of the signs you look for, right? But then the next thing, I'm going to put the normal Shinkansen on here. I'm going to take this one off. All right, so I want you to see how it looks with the normal Shinkansen on here. Put that back. We'll keep it a dashed line so we know it pretty well. So that's the normal Shinkansen, and it's pretty much, you can see price was below both of these. So pretty much you could see we rejected these levels and never ever closed above that point. So once we broke this low here, then that was selling away. All right, so the way I set up my target, I like to trade 1-to-1, look for that 1-to-1 ratio, but we have violated that point already. So what I look for on 1-to-1 violation, 1-to-1 ratio is I'm going to take the Fibonacci expansion and I'm going to put it on my chart. And then I'm going to trade, pretty much that's going to be my target, the 100% level. All right, so that's my target right there. That would have been my target, but I'm past my target. So I'm going to continue to move. I want to see if the market could continue to violate this cloud here. Now we may see a pullback, but I like to keep staying inside in the trade until we get a close above Shinkansen. Now, so don't get confused though, because you could lose some profit this way. The way that I'm telling you is, first of all, you want to look for, let me remove this. First of all, you want to probably look more for your indecision candle, all right, and then watch to see if you get a green candle. So you'll get an indecision candle much like this. Maybe you get something like that. You want to put your stop loss a little above that level, because if the market's going to come up, well, then it's starting to correct itself a little bit. We want to take our profit if we need to. Now, if you're not going to look at that, you could also look at your Shinkansen. So price follows Shinkansen. You could see it follows Shinkansen pretty well. All right. So when it's following Shinkansen, it's never really closing above it. So as long as it stays below Shinkansen, I stay in my trade. And then whenever it closes above Shinkansen, so if this is with the candle that closes above, and this is a crooked candle, right? It's a falling candle, we'll call it. It started to fall off the side here. This one fell off. And it closed above here. So here's your Shinkansen. You close above that, you take your profit there. All right, because price is pretty much you started your trade based off of a Shinkansen crossover and a TK crossover basically, and then your price bouncing off of Shinkansen. That's what we really wanted to look for, was price bouncing off of Shinkansen. Well, price bounced off of the bottom of this Kijinsen because it couldn't go any higher, because that was the resistance point for it. And then we saw this level here, boom, trade to the downside, got triggered there, then the market kept going, and we're good to go as long as it keeps doing this. And now we'll see where the next candle goes in 2 hours and 21 minutes. This candle is showing the most strength to the downside because it's the biggest. This is pretty much the same. It has a big wick on it, and that's what you want to see. All right. You don't want to see any wicks on the upper side when you're moving to the downside. You don't want to see any wicks on the upper candle. You don't want to see anything like that, right? And when you're moving to the upside, you don't want to see them on the bottom, because when you start seeing them on the bottom, you see this one here. start getting them on the bottom, then you're starting to get weak. You had a little more momentum here, then you slowed up with a small candle. Just read what the candle's saying. Then you had a wick on both sides. You've lost momentum. Most of the momentum has died there. That's why we look to trade to the downside on that, because we lost momentum. Now, I'm not looking to trade on the downside as soon as I see something like that. I have to have a reason, and I have to trade basically, like I said, the direction of my TK crossover. So doing that, this would have been a level where I probably take profit or something, not enter a trade. But you look back here and you can see it's the same thing. You get that indecision candle, put an entry above that point, and the market triggers you in. So this is one of the strongest trades that you could look for, pretty much bouncing off of your Tinkinson when the market's really trending. And it's September now. The market should start moving a little more than they were over the summer months. You'll start seeing some more movement with the market. So now you'll have a chance to really catch some of these trades if you look at them. And you could do this on any time frame pretty much. I'm going to show you. I think I've already done this before, but let me show you again. This is the 4-hour time frame. You got a TK crossover. You follow the TK crossover. Only difference here, I'm going to measure the crossover length, and you could see the potential was 292 pips on that. Then you go, say you're trading on the daily time frame. Your crossovers, you're going to have a crossover. So here's a crossover here, TK crossover, and your potential there was 490 pips. I'm not saying you're going to get that, but you could see that's how much of the move was with the crossover. So you go back to a lower time frame, and now let's say this crossover here on the hourly time frame would have yielded you around 70, 80 pips, 80 pips or so, right? So you could see now the crossovers, you start to get less profit. Now this one would have given you a pretty good profit, but you're going to get less profit because your moves aren't going to be as big. You're going to get a crossover quicker and sooner, which is going to be less. So that's the 1 hour time frame. Now let's go down to, I don't trade this kind of stuff, but we'll go to 15-minute. So 15-minute, you probably, let's look at this crossover here. That's really a tight one, but we could look at it, all of them. This one here yielded 81 pips, but then you had a crossover here to the end was down 60 pips. This would have been hard to catch. This one here, you kind of flat here, but you follow the market. We'll box this in. We would box this in. All right, and then we'll trade that. We'll know how to get all into that trade. But yeah, that's what we're looking at. That's my trade. I'm pretty much done. I think I've shown you enough. I don't know what else to really show you, because that's pretty much the trade. That's the setup. That's what you look for. That's what I looked for. Basically, guys, my members get these trade setups. We talk about these setups every day. We have a live webinar that we hold during the day, and we talk about these setups. And when they happen, they don't need me to really even alert them or tell them it's happening, because we already talked about this, and you should be looking for this. All right, and then sometime I'll post these setups in time for members to catch it if they're not aware. All right, but we don't call these trade alerts. We call them trade setups. Okay. So if you're interested in learning more about trading the way that I'm trading with Heikin Ashi and Ichimoku, and basically overall strong Ichimoku trading, then just come to my site, visit my site, FX at One Glance, and you will learn a lot more. You probably don't know, but there's so many more ways to trade with Ichimoku. You probably look at the YouTube videos and figure out what more could you put on there. All right, I haven't really even shown this ever on YouTube too much, and basically I've been showing these videos for years. I mean, I don't know how many years, maybe 5 or something, but you could see what happens here. I've shown this, and this is really the first time that I really started talking about this kind of trading. So there's so many different ways that I trade, so many different setups, and so many simple setups that'll keep you from, losing many of your trades really big. I mean, it's going to be something you have to really follow your rules, though, guys. That's the main thing that I see happening, is we break our rules, and then we tend to start losing trades. And then sometimes trades just don't work out the way you want them to. The market's going to do what it's going to do. But that's why I have a bias where I say my bias is short and long. So I let the market tell me which way to go. So when it gets to a point where it's going to talk to me, it has to tell me if it's going to go higher or lower. The market was below this point. In order to go lower, it has to close above that point. But once it starts making new lows here, then I'm going to start looking for the market to go to the downside. All right, and that's the way I'm going to follow. I'm going to follow what the market shows me. It showed me plain and simple here with Heikin Ashi candles, and it can show you the exact same thing. You just have to learn and understand how they work. I haven't looked at the regular candle at all while I'm doing Heikin Ashi. I haven't looked at the normal candle, and I really don't even look at the price to see where price is. I just trade what I'm trading here, because that way I cut out the confusion and the ambiguity, and you just trade what you see and you trade what's happening. All right, but you know, a lot of people trade with this and then they're going to switch back and forth to see the price. You don't need to see that price because you're trading the average of the price with these candles pretty much, and you're going to trade the momentum, and it's going to show you the momentum. It's going to get you in sometime late, a little late, but I noticed that this trade I was only a few pips later, and then sometime it depends on the move. If you got a big move like this, you may see prices way ahead of the candle. All right, but when this opens up in the middle and closes back down here, it's going to catch up to price, especially when price slows down. And when price slows down and starts to make a pullback, it's going to really catch up to it. So if the next candle is an indecision candle, price will pretty much be right where that candle is. All right, so I made pretty good profit right now, 107 pips, and I got in this trade this morning. So that's 1 day trading, 1 day of trading. I only look at the chart, you know, basically every 4 hours. Really, I really don't pay a lot of attention to my trades because I have them set up, and then I know where I want to do and what I want to do. And then I'm sitting in the chat room with members, and we discuss the trades, and then we see what happens. All right, so hopefully this is helping you guys. I mean, I don't know. This is some stuff that, you know, you really just have to follow the rules. You just pay attention to your rules, and it's simple. But if you break rules and you don't follow the rules, you try to get in earlier than the market, that's when you start having issues. Because I notice a lot of people want to get the very beginning of the move and think they can catch it right at the beginning. And what the market does is it doesn't go your way at first, and may even go against you a little bit and then go your way. So don't try to jump ahead of the market. Try to trade your plan. If you trade your plan, you just wait for that candle to close, or you have a level where you see that you're going to violate. That's what you trade. All right. So hopefully this helps you guys. Good trading with Heikin Ashi candles. The last couple videos I've shown you, this video and the previous video showed you really how to trade this setup. And basically all it is a Tinkinson bounce. All right. But you want to trade the direction of the TK crossover. And that's all you really want to do. All right. So that's it, guys. I think I've talked enough. Hope this helps somebody. And come visit me at my site, FX at One Glance. Try to learn a little bit more. If not, keep watching YouTube videos, and I'll keep sending some stuff out to you. Also, you'll be able to watch. Come on to my site and look at my blog. I opened up the blog and made it free access, so I post stuff on the blog. I'll post this on my blog, and I'm also posting on YouTube, so you guys will be able to see it. All right. Have a great one, guys. Until next time. God bless. So long.